morning and welcome to Market Fatafat right here on ET Now. I'm Avan Dabaj. The markets have cooled off from the high point of the day. There is an attempt to pull back. But remember, there is no sight of 10,700 or 800 at all, as we're currently quoting 14 points higher at 10,680 levels. Well, we have a whole host of stocks coming your way. What should you watch out for in today's trading session? What's looking good on the technical charts? All that coming your way. Let's bring on board Mubina as well as Kunal Bothra and Gaurav Bissa to chat about just that. Well, first up, remember, it's the earnings season that's going to kick-start within a couple of weeks. And you have the IT sector that's really going to be the cynosure of all eyes with respect to the kind of commentary as well that they deliver. Well, Macquarie has come out with their note prior to that, and they say that seasonal weakness this time around will drag revenues within the IT space. In fact, within the basket, if they had to cherry pick, the strongest growth is likely to come from TCS. And remember, they did manage to deliver quite a healthy quarter last time as well. In terms of what is expected from the IT space as well, in terms of announcements, Infosys as well as Wipro, the buyback news is awaited. So that's really the stance coming in. Today, all of the IT stocks are taking a back seat in trade. But let's move on then and chat about some interesting mid-cap names. And sugar as the pocket seems to be outperforming within the basket. There's Dhampur Sugars that stands out. So Kunal, do you believe that it's a buy opportunity at the current price?
Avan, I think this pack is moving in a very synchronized manner, whether it's Balrampur Chini, Dhampur Sugar or, most of these other mid-cap names. I think all of them have been moving with, very strong volume patterns. And, it's not just that the recent, volume patterns have improved for sugar stocks, but the volumes which started, I think, in the month of September, October, I think from there on, these stocks have shown some consistent, price volume patterns, which is on the, positive side. So this could be a strong trend reversal from a long-term basis as well. We've been highlighting a lot of the sugar stocks, earlier as well. I believe Dhampur Sugar is staging a breakout on the short-term charts. Traders could look at a buy. 180 plus could be a target and stop us at 165.
Okay, that's the view coming in on Dhampur Sugar. Keep an eye out on that stock. Very active in trade today. Meantime, let's pull up Nestle. Remember, yesterday the Supreme Court revived the government's 2015 class action suits that sought damages of 640 crores from Nestle India. There were allegations of a high lead content as well as presence of MSG in Maggi. Well, the company has come out with their defense on the back of this news. They say that the lead levels are within the permissible limits. They have taken a stringent program to test the ingredients and that Maggi noodles are safe to eat. Remember, the stock price even yesterday after the news came out, there was no major move. And even today, despite that clarification, it's down by just about 1%. 11,000 though being maintained, 11,089. To number 4 then, and it is autos that have really dominated headlines. Walk us through, Mubina, Tata Motors internals.
Well, finally a breather coming in for the auto space. Tata Motors has jumped neat 3% approximately today on the back of healthy JLR US sales numbers. So total JLR in the US for December 2018 jumped a neat 24% on a year-on-year basis at a little over 14,000 units. This versus approximately 11,400 units in December 2017. For the entire year as well, US JLR sales have risen 7.3% compared to what it delivered so far in 2017. Remember that Tata Motors domestic sales had fallen 8% for the month of December. So this certainly is coming in as a relief, not to mention, of course, after the relentless selling that we have seen right from the beginning of this year, today an attempt to recovery is being made.
All right, that's something to keep an eye out on. Yes, some reprieve coming in. Tata Motors now in top gear at 170. Then there's Jubilant Food. Let's understand what's going on with this counter because it's cracked from those levels of 1244 in trade, Siddharth.
Well, yes, and we often highlight this stock because data emerges quite strongly in this name. So today data is slightly on the negative side, so we are saying safely that these are short formation. But then if you look at how stock has behaved in last 1.5, 2 months, Avan, 1190, 1200, that has acted as a strong support zone. So yes, these are short positions which are building up, but watch out for this support level which is very near to current price. And if it breaches that support level, then probably a downside or substantial downside can be anticipated. That's what statistics are revealing.
All right, there you have it. That's the view coming in. It's Jubilant Food that's in focus in trade today. Also, let's move on then and pull up an RBL Bank because that stock is showing you some sort of a smart move. Question is, Gaurav, is it here to stay?
The RBL Bank has retested the breakout levels of 540, 545 and has bounced back. So it is looking interesting. It has multiple supports at 540. The 50 DMA, the 100 DMA is also placed around those levels. I would wait for a small dip towards the level of 555, 560 and keep a stop loss of 540, 545. On the upside, 590 would be the one I would looking out for. If that is sustained, fresh breakouts can be seen. But for small upside, one should wait for a dip and then buy.
That's the strategy coming in for RBL. This trend is likely to remain intact. Meantime, let's get in a word as well on Mahindra Life. What exactly, Mubina, is the latest news? The stock, though, is looking quite tempered in trade today at 394.
Well, interestingly, it's given up all those early morning gains that it was seeing in the earlier part of the day, and the reason why it was a bit buoyant this morning, in fact, it had jumped almost 4% in the early parts of trade after Deep Mangal Developers, which is one of the wholly owned subsidiaries of the company, signed a non-binding agreement with the Maharashtra government. This for the purpose of development of a tourist destination in the Murud district in Raigad. So, reversing the two-day fall, the stock rose almost about 3.6%. It has been trading higher than the 50-day moving average, but it is still lower than the 100 and 200 DMA. However, while of course this project is going to be developed under the aegis of the Maharashtra government's tourism policy and will help drive investments, etc., the stock price has completely erased all those early morning gains.
All right, that's the view coming in on Mahindra Lifespace. Meantime, it's Ashok Leyland, and do remember the high fuel prices, the liquidity woes, the new axle norms, all of that dented the performance when it came to the December auto sales numbers, which declined nearly 20% to come in at 19,253 units. MK come out with this report and they're saying that there is a reversal in the MHCV sales. The product mix has been adverse. They've downgraded the stock to hold. They got a revised target at 113. And we also spoke to the management, Anuj Kathuria, and they believe that settling down of crude oil prices will help, of fuel prices will help to aid the overall demand. They are seeing robust demand for ICVs, and there will be robust growth in Q4 that will offset the Q3 weakness. But despite all of that, the stock price of Ashok Leyland has been finding it difficult to conquer 100 with the conviction, and now back below those levels at 96. At number 10 then, let's chat about Interglobe Aviation. Within the aviation pocket, so that we tend to focus solely on Jet Airways. But tell us, what exactly are we seeing by way of F&O trends for Interglobe or Indigo?
Well, Jet Airways has gone into F&O ban, so even if one has view, then you can just trade in cash market or intraday in futures. But I want to talk more about Indigo. Now look at the volumes, look at the build-up. It's like around 7 to 8% or 9% rise in open interest in Indigo. And if these were short positions and if these volumes were selling volumes, why a high beta name like Indigo would be down by less than 1%? Now I believe this is more of formation of long positions which are taking place in Indigo. Jet Airways has its own problems to deal with. I understand Indigo is also going through financial issues, but those are nothing to do with corporate governance. And the way stock has moved in recent past, the way build-up is happening today, it seems that these are formation of long positions, even though crude oil price has jumped from $51 to $56 per barrel.
All right, watch out for Interglobe Aviation. That's the latest in terms of trends. Then it's GM Breweries, and what an awful set of numbers, Mubina.
Yes, absolutely. GM Breweries has certainly disappointed quite a bit. Take a look at how the top line has grown, and this I am talking about from the perspective of removing excise duty. If we do remove excise duty, we have a net revenue figure which has just grown a mega 6% at 124.5 crore rupees. However, I think the bigger concerning factor is the profit figure, which has declined a good 25%, now coming in only at 16.7 crore rupees. And I think that is going to be the worrisome factor, the kind of hit that the company has taken on the EBITDA in the third quarter, and hence you are seeing the decline come by in the stock price.
Okay, so 644, 11% down. That's GM Breweries for you. Meantime, it's TCS as well. That's going to be in focus, of course, when it comes to the numbers. You heard out the Macquarie report. But let's understand how this stock is faring based on technicals. What is the take that you have, Kunal?
TCS, of course, is one of the largest stock in the Nifty IT space. Also, it has a bearing on how the Nifty also performs largely. Now, what has happened today for TCS in terms of stock price is that the stock has broken its 200 moving average, and that has happened over the last 1.5 or 2 months. This is the third attempt the stock is trying to break in sort of close. If it closes below this average, then this 1900 mark for TCS could act as a resistance. Now earlier the stock was trying to form a base. There were indications that maybe the stock could restart a new uptrend and take support at this 200 DMA. But if it convincingly closes below this average, you could see a reversal of sorts for the stock price as well, and that could probably have an effect on Nifty IT overall as well. So I believe TCS could be something very interesting in terms of large cap IT space. If it closes below 1900, I would expect the stock to correct further.
All right, that's the view coming in. Below 1900, there could be a further correction for now if it closes. But for now, the stock is at 1858. Let's check in then on Bharti Infratel as well. And, there has been so much negative news that the telecom sector as a whole has been bombarded with. But Bharti Infratel, Mubina, has managed to hold its ground.
Absolutely. In fact, for the last 4 trading sessions, we have seen Bharti Infratel post quite a steady run-up, and that's pretty impressive, Just in the last 4 sessions, we have seen it gain more than 6.5%. Today as well, it's higher by 2.8%. Yesterday, it was one of the top Nifty gainers. Now, do remember, just yesterday, we had quite an optimistic report from Credit Suisse, wherein they do maintain an outperform stance target at 340 rupees, as they say that the new disclosures that are being made by the company should allay worries on rental pressures, and the worst of tenancy exits as well, according to them, is now behind the company. The disclosures are giving comfort in the continuity of MSA, and the rally, the uptick in Bharti Infratel is only continuing.
Yes, indeed, that's something to map out on Bharti Infratel, 279. And then Sun Pharma at number 13. And remember, this stock has been in news. You have seen some sort of a reversal in the overall trend, and there's positive news as well coming in for Sun Pharma. They have acquired Japan's Polar Pharma, and in fact, this is an acquisition of 100% shares of Polar Pharma and Inc. And that's the company's by the company's wholly owned subsidiary, and that has finally been concluded. They had entered a definitive agreement to acquire this Polar Pharma, which, remember, is engaged in the research and development as well as distribution of branded and generic products in Japan. Their portfolio has a lot of dermatology projects, and remember, Sun Pharma had forayed into the Japanese prescription market about 2 years ago in 2016 with the acquisition of nearly 14 established prescription brands from Novartis. So this sort of expanding or cementing their move within the Asian region of Japan. Moving on then, ADAG. Let's talk about one of the stocks within this basket, and Siddharth, you've chosen Reliance Capital.
Yes, you are seeing heightened activity. There is a substantial rise in open interest, and if you can see that the prices are bouncing back. I don't want to say whether these were long or short. At the time of capturing this data, stock was down by 1%, but still it was anticipated these may not be just short. Look at the stock, the way it has been moving since past few days. 208, 210 has been good support. Don't paint these positions by any color. Just watch out for that support zone. Till that time 208, 210 doesn't breach, I think fresh downsides are ruled out from Reliance Capital.
Okay, Reliance Capital currently seeing some sort of a pullback at 213, rise in futures in the open interest. Meantime, let's also focus then on what the take is on the outlook for banks. JP Morgan today has come out with their report, and in fact they are saying that they expect the deposit franchises to re-rate. In fact, HDFC Bank, ICICI Bank and SBI, these are the 3 stocks that should be flagged off because these are the 3 top picks from JP Morgan. The target price of HDFC Bank is 2,400, ICICI Bank bullish with a target price of 385. They're saying the system constraint is shifting from NPLs to deposits. In fact, they're also expecting a positive, progressive PSU Bank comeback over FY20. They've selected SBI as their top pick within the basket and believe that the first half of the next year will monitor resolution. So there is some potential within the banks. Okay, moving on from that to another IT name, and that is Hexaware. Gaurav, give us a sense as to how you're placing your bets on this name. You have seen a lot of correlation with the currency. Do you believe that Hexaware, if one had to cherry pick within the mid-cap IT basket, it would stand out?
I would not cherry pick at the current levels. There are a couple of reasons for it. Stuck in the range 300, 330 has been the range. 335 is the level from where we have seen strong reversals happening last 3 occasions. For me, it's a strong buy above levels of 335, stop loss of 325, target of 355. At the current prices, I would not be too interested. Buy only at higher levels.
Okay, that's the take. Buy above a level of 330. On that note, we take a quick break. Do stay with us. On the other side of Market Fatafat, we'll flag off a whole host of other stocks that you don't want to miss. Staying on with us, this is Market Fatafat, and it is a flat line for the index right now. 57 points up on the Sensex, where the broader markets are seeing a tad bit of underperformance. JK Tyres is the next stock that merits a mention, and in fact they have some ambitious plans that they've laid out in terms of their expansion as well as their overall investment plans. We understand that they're targeting a $2 billion turnover, and for this they're likely to also invest quite strongly. They're looking to invest nearly 1,250 crore rupees. That's the latest coming in on JK Tyre with respect to their forward-going plans. Let's move right on then and focus in on Asian Paints and understand the overall derivative setup, because this one has been relentless in its up move, Siddharth.
Well, yes, long formation in today's trading session, around 7% rise in open interest, and prices are moving higher. Volumes are not that great, but that's okay, because this is third consecutive day that stock is going higher in a falling market, which shows that there is, substantial amount of underlying strength, and hence we are discussing about it.
Underlying strength, optimistic, that's the view on Asian Paints, or rather third consecutive day of gains. Meantime, Mubina, no show of Market Fatafat is complete without the mention of Jet Airways. So let's talk about it today as well.
Well, it's an integral part of the show, what can I say? But yeah, aviation stocks today are under significant pressure. And I think today's fall could be attributed to the relentless rise in Brent prices. Now, perhaps relentless is putting it a little too extremely. But for the last 4 trading sessions, we have seen Brent go higher and higher in trade. In fact, now it's at $56 per barrel. So after falling sub the $50 per barrel mark last week, we've seen a massive recovery come by all the way once again back to $56 per barrel. In fact, we do have Moody's as well today that has given quite an encouraging report when it comes to WTI, as they believe that consumption demand is going to increase. It's going to stay strong into 2019 as well, 1.4 million barrels per day perhaps, and this is something I guess that is further supporting oil prices and in turn putting pressure on stocks like Jet Airways.
All right, there you have it. That's the latest take coming in. Second straight day on the trot that it's declining, but of course it is a stock that one has to flag off quite often these days. Meantime, CESC is another name that we're talking about. The stock is down nearly 0.5% in today's trading session, but the company has won a distribution franchise. In fact, this is of the Malegaon Municipal Corporation area, which the Malegaon Circle is a part of Maharashtra. And this has been issued by the Maharashtra State Electricity Distribution Company. Apart from Kolkata and Noida, CESC's power distribution franchisee is spread across 3 circles in Rajasthan as well, Bikaner, Kota as well as Bharatpur. Down 0.5% though for CESC. At number 21 then, let's talk about a Manappuram Finance. We're seeing some activity and fervor in this stock. And you think that this uptrend is sustainable, Kunal?
So I think there are a couple of reasons for that. One is that the stock is going through a very steady uptrend. So not just in terms of price, because prices have moved up gradually, but you look at the volume patterns as well. There has not been a phase or a accumulation of 2-3 days where you see some sudden spike in volume. So it means that this is a staggered and a very steady uptrend building up for the stock. Now you compare it with the gold prices moving up higher, and then you look at the chart patterns for Manappuram, which is just about in breaking distance of 200 DMA. So a lot of positives in store for the stock price, and which is why I believe that this steady uptrend would continue. The stock could test 100 levels as well. Stop loss could be kept at 91 if you're looking at a fresh buy at current levels.
% on Manappuram Finance, 94.6. Mubina, let's talk about the next stock then. At number 22 is Torrent Power, that's active today.
Oh yeah, that it is. In fact, a lot of power stocks have certainly been in focus on account of distribution franchises that have been given to the companies, to various companies, not just Torrent Power. But yeah, specifically speaking for Torrent Power, the news that we have received yesterday post-market hours is that it has won a distribution franchise for Thane's Urban Circle. This will be for a period of 20 years. Not a very major uptick, but yeah, 0.4% higher for this power company.
Okay, so watch out for all of the stocks, particularly Torrent Power. Meantime, check in on Page Industries. This stock saw absolute relentless selling pressure yesterday, and that seems to be continuing today. Siddharth, what exactly are the observations given the fact that we've seen 2 straight days of acute sell-off?
Well, I think today's word is relentless, Avan, and we have been extensively using that. Page Industry has given a price volume breakdown. We always keep talking about price volume breakouts. This is price volume breakdown. We are seeing substantial formation of short positions in future segment. Volumes are very high. We are just into 2.5-3 hours of trade, and volumes are about to surpass last 1 month or last 2 months average volume, which says that there is significant selling pressure.
All right, that's the take. 22,710 is where Page is at, but remember nonetheless that the selling pressure is very evident. HDFC, meantime, it's holding out quite smartly in trade today at 1952, and we understand that they have assigned loans worth 6,953 crores. This is in the third quarter. They've also declared their income from dividend, which stands at about 2 crores in Q3. And let's talk about another banking stock then, and Mobina Federal Bank is on the brokerage radar.
Oh yeah, UBS certainly seems to be having quite an optimistic stance on Federal Bank. They have a buy over here, and the target price that they're watching out for Federal Bank is at 120 rupees. Now, they believe that the strong operating growth is something that will drive re-rating, along with the fact that profitability as well is expected to improve. NPL risks are smaller than expected earlier for Federal Bank, and they are accordingly increasing their FY 19-20 estimates by 5% and 15% respectively.
All right. No wonder then the stock is flexing its muscles, nearly 2% and counting. But on that note, we'll wrap it up right here on the show. So it's a wind down on Market Fatafat. Thanks so much for watching. Stay tuned for Markets at Noon.
Complete your TV viewing experience with the best of Hollywood entertainment and news. Get the Times Network Value Pack at just Rs. 13. Ask your cable or DTH provider now.